Hi everybody, thank you for joining me. If you don't know already, my name is Kia and I'm doing a series on taxes. We're talking about the basics. Today we're looking at that big one, income tax, that you should all be pretty familiar with by now. So let's talk about it. What is it? Income tax is the tax you pay on your income. That is pretty self-explanatory. An income could be money you earn through employment. It could be a profit you earn if you're self-employed, if you have a side hustle or you rent a room in your home, anything like that. Anywhere you're earning money or bringing income that's not taxed at source. So if you're not already paying tax on it, then you would have to pay income tax on it. Income tax is probably the biggest money maker for the UK, for the government in the UK, and it applies to the vast majority of people depending on what circumstances you're in. So remember earlier we talked about how big VAT tax was as a revenue stream for the government. Income tax is probably even bigger than that. For the majority of people who are employed in the UK, your income tax is automatically deducted from your wages through PAYE. What's PAYE? It's pay as you earn. So on your wage slips, you will see PAYE deductions, and that's automatically removing your income tax from your wages before you actually receive them in your pocket. For self-employed people, income tax is something that you need to calculate, budget for, and pay every year for your self-assessment tax return. Now, regardless if you're employed or self-employed, if you're employed, 100% I recommend that you check your pay slips every single month, check your tax code. Often what can happen is that you're actually on the wrong tax code, and that's not really anyone's fault. It's just that it's a bit of a tricky situation for people to update and look into it every single time. If your circumstances change, your employers might not know about it, or whatever the case may be, you might be paying the wrong amount of tax. So always go and look in and check that every single time you get a pay slip, just to make sure you are paying the correct amount of tax. You could be due a rebate. If you're self-employed, then you need to be calculating yourself. You need to be making sure you're doing the correct calculations, keeping all of your backups and evidences, and submitting your SATRs every single year. Now, what's the criteria and the rates? Well, the criteria for self-assessment tax return is that it must be submitted every year by the 31st of January. You will need to have registered yourself as self-employed with HMRC the October before you're due to make that submission. Okay, so if you need more information on that, I do have a separate video on self-assessment tax return where I talked about 3 key things that you need to know. So I will link that in the description box for you guys. You may need to submit an SATR, a self-assessment tax return, if you're self-employed, if you receive income over £1,000 in the period. So if you've just started trading, you've just started your own business and you've made over £1,000, then you're going to need to register a self-employed or for a self-assessment tax return. If you are employed and you're a higher rate or additional rate taxpayer, then sometimes they will ask you and they will say, send you a letter and say you need to submit an SATR this year. Or if you're a limited company director and you've received a loan from your business. So there's different circumstances that may apply to you in regards to doing an additional check or submitting SATR. If you're not sure if the situation applies to you, there is a link that I'm going to stick in the description box to the government website, which they do have a very decent calculator that is a very brief questionnaire that asks you about your circumstances, answer the questions, and it will tell you, do you need to submit or not? And I do think that one is finally a very helpful one that HMRC have come out with. Then we've got talking about the rates. Now, everybody gets a personal allowance of £12,500 every single year. And that's great. That's money that you don't pay tax on. You can earn up to £12,500 a year and you won't pay any tax on that. Then we go into the basic rate, which is 20%. So anything you earn from £12,500 up to 50 grand in a year, you're charged 20% income tax on that. Higher rate is 40%, so between 50 grand and 150 grand a year, you're going to be paying 40%. And then we've got the additional rate at 45%. So if you're earning above £150,000 in a year, then you're going to be charged 45% income tax on that. You don't get a personal allowance if you're earning over £125,000, just because of the way that the taxes are calculated and deductions are made. When you go over 100 grand, by the time you reach 125, essentially your personal allowance is wiped out. But that's a bit more of a complex issue that I'm not really going to talk about today. We're keeping it simple. Now, pros and cons of income tax. There's really only one thing about income tax, and that is that it's a progressive tax. And this means that it's really actually more of a personal opinion situation as to whether you think it's a positive or a negative. If you earn less, you pay less. Your tax rates are lower. If you earn more, you pay more. The tax you pay is at a higher rate. So obviously, in general, for people who earn less, we're very happy. We'd like to pay less tax. And for people who earn more, we're not very happy at all. We don't want to be paying as much tax. And what often happens, what you'll see is that these high earners, or these higher rate taxpayers, if you're employed, you will then go and open a limited company and like offer your services as a consultancy service to your employer. And that way you'll only be paying 19% corporation tax rather than paying the higher rate 40 or 45% tax. So that's the reason that you'll often see people doing that and offering consultancy services for a limited company. It's a lot more tax efficient. That's it for today, guys. Really, really simple. So next time we're going to be looking at a live example, a calculation for you how to pay less income tax. I'm going to be talking about how to calculate your income tax for your self-assessment tax returns. And as always, there is a free download available on the website. So please go and check that one out if you feel like you need more information. Thank you so much for watching. I really hope you enjoyed the video and found it useful. If you did, please drop me a comment, leave me a like, subscribe, follow, share, etc. And I'll see you guys on the next one. Bye.